Welcome to TechCast by Raqmedia.com, your quick stop for the latest tech news, smart hacks, and cutting-edge updates. Stay informed, stay ahead. Let's dive in.
Welcome to Raqmedia TechCast, your go-to daily source for the latest in tech news and trends. We've got a really fascinating deep dive for you today. We're exploring a pretty surprising financial comeback that's really been making headlines.
That's right. Forbes' recent estimate, this is from March 2025, puts Donald Trump's net worth at an astonishing $5.1 billion.
$5.1 billion, okay.
Yeah, and what's truly remarkable here, and this is really the core of what we're digging into today, is that this figure more than doubled in just 1 year.
Doubled. Okay, let's unpack this. What exactly fueled such a massive surge? Because it wasn't just his traditional real estate, right? I mean, that's significant, obviously, but...
Exactly. A huge boost came from his social media platform, Truth Social, and also a rapidly growing portfolio of crypto offerings.
Right, the crypto part. And this is where it gets kind of interesting, because you remember he once famously called crypto a scam.
Oh yeah, not money. Based on thin air, I think he said.
Right. And now, fast forward to 2025, and he's publicly saying, I'm a big crypto fan, even talking about making the U.S. the crypto capital of the planet. That's quite a pivot.
It absolutely is. So in this deep dive, we're going to peel back the layers on both the tangible assets, the real estate, but also these digital elements shaping this pretty extraordinary financial narrative.
And we're using solid sources here.
Yeah, we'll be drawing insights directly from public documents, like the OGE Form 270E, that's the official financial disclosure form, plus analyses from places like Forbes, the Associated Press, CBS News. So get ready to understand the surprising dynamics driving this wealth.
Okay, so to really grasp this transformation, we probably need to start with that digital explosion. Truth Social first.
Makes sense. Forbes, back in March 2025, valued Truth Social's parent company at a staggering $2.6 billion.
$2.6 billion, wow. But wait, how does that square with its actual performance? Because I remember seeing reports.
Right, that's the kicker. Forbes reported sales of just $3.6 million in 2024. And get this, a net loss of $401 million.
$400 million loss. So how does that valuation make sense?
Well, Forbes called it one of the most financially perplexing businesses in America. They basically said Trump-loving traders bid up the shares to head-scratching prices despite the fundamentals.
So it's less about profit and more about belief, or maybe brand loyalty.
It seems like a powerful illustration of that, yeah. How brand loyalty and maybe political fervor can sometimes just completely overshadow traditional financial metrics in certain markets. It's creating wealth from, frankly, unprofitable platforms.
Okay, and that same dynamic, supporter enthusiasm driving value, that extends to crypto too, right? Like the meme coin.
Exactly. The Associated Press reported on the Trump meme coin. Apparently, it was created just as a way for supporters to have fun. Announced some swanky crypto ball.
Just for fun, but it had perks.
Oh yeah, the AP highlighted its clear utility. We're talking direct access, invitations to private receptions for the top 25 investors. And the top 4 even got crypto-themed watches. Plus, the creators, and this includes the entity the Trump Organization controls, they reportedly made hundreds of millions of dollars just from collecting fees on trades.
Hundreds of millions in fees.
Okay.
So beyond meme coins, there were also NFTs, right?
Yes, definitely. We need to talk about those.
Yeah.
There was the POTS Trump NFT collection. 10,000 NFTs launched on the Solana blockchain.
And Melania Trump was involved in the design.
Yeah, she had creative input, apparently.
Yeah.
They were designed to showcase iconic moments of his administration, priced at $50 each, sold through USA Memorabilia and Parlor.
And then there were the Trump cards, Series 1 and 2.
Right. Digital playing cards, different images, Trump is King of Hearts, Trump grilling hot dogs, that kind of thing. They sold for $99 each. Series 1, 44,000 of them sold out in hours.
In hours?
Yeah. Series 2 minted 47,000, with 46,000 for sale. And Series 2 had that extra hook you mentioned earlier.
The gala dinner.
Exactly. Hold 47 or more cards, and you get access to a gala dinner with them.
So these weren't just digital collectibles, they were generating actual income. Did the financial disclosures show that?
They did. The OGE Form 278, that disclosure we mentioned, it showed income from NFTs ranging from $100,000 up to $1 million.
$1 million from NFTs, and the market for these was volatile.
Very much so. It had this unique dynamic where the floor price, the lowest asking price, it tended to rise with any major news about him, good or bad.
Really? Both positive and negative?
Yeah. like an 800% jump in daily sales volume back in January 2023, and another surge, 400%, right after the New York Attorney General's indictment was announced. It's quite something.
Incredible. So meme coins, NFTs, what else on the digital front? World Liberty Financial.
WLF.
Right, WLF. The Trump family has a significant stake there, around 60% ownership, according to AP and CBS News, and they're set to take an additional 75% in net revenue from future token purchases.
And this company launched its own stablecoin. Yeah, USD1. That's a crypto designed to hold a steady value, usually pegged to the dollar. And it got a big boost from a $2 billion investment fund in the UAE. They apparently used USD1 to buy a stake in Binance.
But there was a catch with the WLF tokens themselves.
Yes, CBS News pointed out that the WLFI tokens are non-redeemable, meaning investors can't just cash them out directly with the issuer. That's a key point for liquidity, how easily you can sell.
Okay, so all this digital activity, it really frames that shift we talked about at the start from calling crypto a scam between, 2019 and 2021?
Yeah, very dismissive back then.
To suddenly, in 2025, I'm a big crypto fan during a trip to the Middle East. I mean, obviously there are financial incentives we just discussed, but what's the bigger picture here? Why the public embrace?
Well, the Associated Press tied it to a few things. Assurances from crypto industry backers about re-election spending, key fundraisers, meetings with Bitcoin miners.
So political calculations, too.
Seems likely. And AP also highlighted the growing influence of people around him who are big on crypto. Elon Musk, David Sachs, who's now apparently the Trump administration's crypto czar.
Crypto czar, okay.
And cabinet members like Howard Lutnick, Pete Hegseth, Sean Duffy, all described as enthusiastic crypto boosters. So it looks like more than just personal finance. It's maybe recognizing crypto as a significant political and economic force now.
Right, maybe an unavoidable one. But okay, while this digital surge is clearly reshaping his finances, we can't ignore the foundation, right? The real estate.
Absolutely not. That's still a massive part of the picture. Forbes, again in March 2025, put the total net value of his real estate investments at $1.1 billion.
Still over $1 billion there, and that includes what kind of properties?
It's a mix. Iconic commercial spots, high-value residential stuff, like he's got a big stake in 1290 Avenue of the Americas in New York, part of 555 California Street in San Francisco.
And homes, too.
Yeah, high-value condos in Trump Tower, Trump Park Avenue, plus those 4 homes down in Palm Beach, Florida.
But it's not all rosy in the real estate portfolio, is it? I remember reading about 40 Wall Street.
Yes. That's a really striking example. Despite being a major address, that leasehold actually has a negative net value, minus $33 million.
Negative. Why?
Debt. According to Forbes and the OGE form, there's over $100 million of debt on it that's maturing in 2025. It's a stark reminder that, even in huge portfolios, liabilities can really bite.
Definitely. Okay, so real estate, $1.1 billion net. What about the golf clubs and resorts? That's another big area for him.
Indeed. And Forbes estimates their total net value at another $1.1 billion.
Another billion? Wow, so Mar-a-Lago must be a big piece of that.
Huge. $368 million net value for the private club. And Forbes estimates profits there have basically tripled since his 2016 campaign.
Tripled. And the other golf courses?
His U.S. clubs, that's 10 courses across 6 states, they're valued at $338 million net. And their operating profits really jumped from about $19 million in 2020 to $48 million in 2023.
Quite a jump. What about Doral in Miami? That place had issues before, right?
It did. Debt issues. But it's recovered significantly, valued now at $248 million net. Estimated profits are apparently double their best year during his first term.
Okay, and the European ones? Scotland, Ireland.
Those are interesting. They declared over $100 million in losses previously, but now they're collectively valued at $100 million net. Forbes says business there is picking up recently. So yeah, another turnaround.
So beyond the huge real estate and golf holdings, what's left? Liquid assets. Smaller stuff.
Yeah. Forbes estimates his liquid assets, cash, and similar things at a whopping $770 million.
$770 million? Where did that come from?
It's apparently from a mix of things. Selling some crypto, selling the Washington, D.C. hotel, refinancing that San Francisco office complex we mentioned earlier.
Okay, and the licensing business, where people pay to use his name.
That's valued at $104 million net. And Forbes noted that analysts suggested removing the discounts they used to apply to its value, basically saying it's worth more now after his 2024 win.
Interesting. Any other bits and pieces?
A few. Aircraft, 1 helicopter, 1 plane, valued at $12 million. Also, Forbes highlighted about $5 million in loans he made to his kids. Don Jr., Ivanka, Eric.
Loans to his kids.
Yeah, tax returns showed he collected about $50,000 a year in interest from them between 2015 and 2020. And finally, pensions valued at $2 million.
Got it. Quite the diverse portfolio. Just a reminder for everyone listening, for more in-depth coverage and exclusive tech updates, be sure to visit us at Raqmedia.com.
Okay, so we've covered the assets, both digital and traditional. Now let's flip to the other side of the coin, the liabilities, because those are also a pretty significant part of this financial picture.
Right, particularly the legal judgments.
Exactly. Forbes, in March 2025, estimated nearly $600 million in legal judgments just from those two big court battles in New York State.
$600 million. And the OGE form, the disclosure, that breaks it down a bit more.
It does. It shows liabilities from the E. Jean Carroll litigation. There are bonded amounts listed, one between $1 million and $5 million from 2023, and another over $50 million for 2024, both marked as stayed pending appeal.
Stayed pending appeal, okay. But still listed.
Still listed. And then there's the New York Attorney General litigation liability, also listed as over $50 million from 2024, and also stayed pending appeal. And crucially, interest keeps adding up on these amounts.
Right, that interest clock is always ticking. So this whole situation, the assets, the liabilities, the crypto involvement, it inevitably raises questions about, public office and personal finance.
It definitely does. And we see different viewpoints reported. For instance, Nick Carter, who's described as a pro-Trump crypto enthusiast, reportedly called Trump's private crypto businesses distasteful and an unnecessary distraction. He apparently preferred focus on legislation.
And others were critical too.
Yes, reports cited Professor James Thurber calling him a salesman-in-chief. And Senator Richard Blumenthal reportedly said that crypto ball dinner was like putting a for sale sign on the White House, effectively auctioning off access.
Strong words. What was the official response?
Well, the Associated Press reported the White House position was that he attends these things in his personal time, and that the White House itself has nothing to do with Trump's meme coin. Again, we're just relaying what the sources reported here.
Understood. Now, shifting gears slightly, what about the regulatory side? Has his administration's approach to crypto changed things?
That's a really interesting angle. A CBS News analysis found that the SEC, the Securities and Exchange Commission, has actually paused investigations into a dozen crypto companies since his inauguration.
Paused investigation?
Yeah, and there's a specific case mentioned involving Justin Sun, a crypto billionaire. He invested $75 million in that World Liberty Financial company shortly after the election.
Okay.
Then, according to CBS News and AP, just weeks after Sun made a second investment, the SEC apparently reversed itself on a case against him. They asked the judge for a stay, citing public interest.
That timing is notable.
It raises questions about transparency, for sure. And part of the difficulty, as CBS News pointed out, is that crypto companies generally aren't legally required to publicly disclose who's buying and selling on their platforms.
Which makes tracking potential conflicts of interest much harder.
Exactly. It made things more difficult, as they put it.
So have lawmakers raised concerns about this intersection of crypto, personal finance, and the presidency?
Yes. Senate Democrats, including Elizabeth Warren, Ron Wyden, Chris Van Hollen, they sent a letter to the Federal Reserve and the OCC, the Office of the Comptroller of the Currency. They voiced concerns about potential extraordinary conflict of interest and even unprecedented risks to our financial system.
But legally, what are the rules for a president regarding conflicts of interest?
It's a bit different. According to CBS News, as president, he's actually not subject to the main criminal conflict of interest law that applies to many other federal officials.
Oh, really?
Yeah. However, he is required to disclose his assets and income under the Ethics in Government Act, and that explicitly includes his crypto assets.
Yeah. Okay, so disclosure is required, but the specific conflict law doesn't apply. That's an important distinction.
It is.
So, wrapping this all up, what does this deep dive really tell us? What should listeners take away from this complex picture?
Well, I think it clearly shows this increasing entanglement, doesn't it, between high-profile public figures and these burgeoning digital asset classes. Crypto isn't just niche anymore.
Right. It's evolved incredibly quickly, from a fringe interest to arguably a dominant political force, and obviously a significant, if complex, source of wealth for some.
Exactly. And maybe this whole situation encourages us, all of us, to think about the future implications, for transparency, for regulation. How does this change the nature of wealth itself in an increasingly digital age?
Yeah, as these digital assets keep growing and integrating, how will they reshape those traditional lines, the ones between personal finance, political influence, public accountability?
It's a huge question, and one that's definitely not going away anytime soon. It's going to continue to shape the conversation, no doubt.
Yeah, absolutely. A lot to think about there. Once again, for more in-depth coverage and exclusive tech updates, be sure to visit us at Raqmedia.com. Thanks for tuning in to the Raqmedia TechCast. Today's episode was scripted by Ezzedine Yahayaoui. Don't forget to subscribe to our channel and our podcast series on Spotify and stay updated with the latest from the world of tech.